Welcome to the analysis of day 25 in the $50 to $1 million challenge series. In this video, I'll break down how I analyze my trades and the criteria I use to make my decisions step by step. First and foremost, we need to conduct a multi-time frame analysis before we start. Looking at the daily gold chart, we can see that we're in an uptrend on the daily time frame, continuing with shallow pullbacks for a long time. If we examine the recent structure, there has been a break of structure, and similarly, after breaking the last low, a market structure break has occurred on the daily. We mark the daily supply and demand zones as a guide. As observed, the price is currently in a nice daily demand zone. Dropping down to a lower time frame on the 4-hour chart, the structure becomes even clearer. The liquidity in the last demand zone has been taken, and there has been a downtrend for a while. If this demand zone does not hold, the next demand zone below could be a potential trade area. But remember, trades in the direction of the trend generally have a higher success rate than counter-trend trades. Our goal is to seek trades on lower time frames during pullbacks, while the higher time frame trend is down. I'm marking each break of structure here. These are very shallow retracements. If you observe the candle sizes, they indicate that the momentum is slowing down, suggesting that the downtrend might end and a correction could begin. After a while, the signal of a possible correction appears with a change of character. To confirm if the correction after the change of character is sufficient, we use the Fibonacci tool to check if the price reaches at least our discount level, and indeed the price is within the discount zone. To see if the price is corrected enough, we examine where it has reversed or where it could potentially reverse. The price has made a reversal by taking liquidity from an untested demand zone. On the 5-minute chart, we notice that the price forms a power of 3 box structure. At the same time, we observe that the outer structure on the 5-minute is still short. Although the 5-minute is showing short, the strong reversal on the 15-minute from the demand zone after taking liquidity suggests that the correction might be over and a reversal could begin on the 5-minute. Similarly, I'm marking the break of structure of the smaller inner structures forming on the 5-minute chart. Before entering the trade, we see that the price reacts again from the demand zone and makes another break of structure. Another break of structure occurs with a shallow retracement, and then a change of character happens in the outer structure on the 5-minute. Since there is a nice inducement and demand zone on the 5-minute, trades could be taken from the OTE levels during a potential reversal. On the 1-minute chart, instead of the extreme zone, we observe a better demand zone above that area, and if the price gives us a reversal signal, like a change of character, in this structure, we can take the trade. The price reaches our desired area, and on the 1-minute, a change of character occurs with imbalanced candles, allowing us to enter at the OTE levels again. At the same time, before the change of character occurred, there was a negative divergence on the RSI and an SMT with silver. As for targets, looking at the 5-minute chart, we can set the liquidity zone and supply zone above as targets. Observing the power of 3 structure, I believed there was a high probability of the price reversing from the demand zone after taking liquidity. Although we are currently in a long trend, the higher time frames indicate a short trend. Therefore, it's most reasonable to keep short trades longer and long trades shorter to stay aligned with the trend. Everything is set, and from this point on, the trade hits TP without stopping us out, closing the position with a 5R. Thank you for watching. I hope this analysis was helpful for you. Don't forget to subscribe to the channel and turn on notifications for more content. See you in the next video.